last and final piece of the technical puzzle to help you understand the business is the RSI, and in this class we use TDI, which thanks to Dean and Compass for letting us use these slides. But here's the deal. The TDI is comprised of the RSI line with some averages and some bands on there. So in order to use it properly, you got to at least understand the underlying indicator. Okay, so let's talk about indicators. All right, would you give me this? Would you give me that all indicators measure the same thing? They all plot above or below a baseline or a zero line or some center axis. Right? If you use several, which one of them is going to win? If you're using MACD, and if you're using CCI, RSI, stochastics, when they all don't exactly line up, which one is going to win? Which one will be the one that you say, oh, well, this one rules. I'll take it. Well, why not master the use of just one good indicator that happens to line up with dealer price behavior for our purposes, which will help validate or confirm the signals that we've talked about on the price action. Eventually, you'll get to where you don't need any indicator, and that's my goal. But the indicator is always good, helpful to take a glance at because it'll give you level counts when level counts aren't available. It'll give you some things to help you understand where you are, and I'll show you in a minute what I mean. But I wanted to show you that I took a picture of Carr's chart when we first met, and I saved it for you guys. And he was an indicator buff. I'm just kidding, man, but this is a lot of people's charts. It's kind of a joke, but it's not really a joke, is that people like, I take the CCI, ATR, RSI, MACD, stochastics, momentum indicator, and I find out which one is in the right phase, and then I take my trade. And then if it doesn't work, you go, well, ATR didn't line up with CCI. That's what my problem was. Man, a lot of people do this. And you can't even see the price action or understand the price action by looking at all that stuff. And Charlotte just pointed out something crazy, that she was actually taught to look at a chart like this. And it's absolutely crazy. Thanks for pointing that out and admitting it. But people do trade like this because they keep figuring if they add the next holy grail. Reminds me of a story, and some friends of mine from California, Deb and the Daves and Tom, Jenny, and those guys that hang out there. I love those guys. Dave and Larry. They have a big group over there, and they meet all the time. And the next guru would come through and would give them the secret holy grail indicator, the slingshot, the ATR calculations based on this. And they would just add it to the chart. And there was a joke chart. I don't have it. I don't know what happened to it. But it about looks like this with a bunch of crap on the chart. And what it essentially amounted to was they wanted to believe that the next one was the Holy Grail. The next one was the Holy Grail. So they just kept adding it, adding it, and adding it. And this went on for about 7 years before they met me. And their chart looked about like this. So I'm not knocking them. Just understand, when people don't know, they keep going, oh, if you had this indicator, you'd be able to filter out this. But then if this indicator was on there, you could filter out that. And you become paralysis of analysis, too many indicators, and you drive yourself crazy and you don't even know which one matters anymore. So what I'm telling you is that you learn to master one. And for the purpose of this class, I like to use RSI and TDI. RSI is based, I'm gonna give you the underlying indicator for TDI, and that is the relative strength index, RSI. It won't fall for the spikes. RSI is probably the best indicator for our purposes. I don't want to knock anybody else's indicator, but it's the best indicator for our purposes. It's excellent for confirming the shifts in momentum. It's excellent for spotting divergences. And when you learn how to use it properly, you can trade it almost by itself. And we do a drill of that in the boot camp, and a lot of people turn the corner on that drill. So in order to use the TDI, you have to understand the foundation of it, RSI. So RSI is plotted above or below a 50 or market baseline. It goes from 0, the grid goes from 0 to 100. It's confined. A baseline break, a 50, will confirm a shift in momentum. So if RSI line breaks its baseline, that's a confirmation that the trade is still good if you're going in the direction of the break. Overbought, oversold, above 70, below 30. Okay, we use 68 and 32 because that's the way Dean coded it. But within the RSI line, showed you a couple pictures of it by itself, you can actually see M and W formations, which is pretty neat. You can actually draw trend lines on the RSI part and draw your levels and stuff inside the indicator subgraph, and that will give you guidance in your trading. Okay? So range analysis. Okay, how does the indicator range? I said it ranges from 0 to 100, and in a normal range, it will oscillate between 70 and 30, right? The extremes are above the 70 and below the 30. A bull range is when it will find support slightly below the market baseline. Okay, so here's what I mean. Here is the indicator subgraph. There's the midline. So in an uptrend, the indicator will shift over, oscillate slightly below and come back. Oscillate slightly below the market base and come back. Slightly below the market base and come back. This is an indication of an uptrend. Okay, I'm going to show you how this ties into TDI. So your entries would be obviously stop hunt low, enter, stop hunt low, enter, stop hunt low, enter. A recrossing of the market baseline. Okay? Exactly the opposite is true of a downtrend. It ranges 60 to 20. So what do I mean? In a downtrend, the indicator will oscillate slightly above the baseline to around 60 and fall. Slightly above the market baseline and fall. Slightly above the market baseline and fall. Stop hunt high, drop, stop hunt high, drop, stop hunt high, drop. The extremes, 80 and 20. This was coded for us, which is very cool, where you're looking for the extremes. Obviously, when price comes over here and gets in the extreme, you're looking for the reversal. Why? Because it takes about 2.5 to 3 days to get to the extreme on a 1-hour chart RSI. The RSI plots very nicely on the 4-hour chart and will help you determine extremes. Okay? Take a look at that stuff. So if we're talking about trend changes or shifts in momentum in the market where price is oscillating between 80 and 40, right? Finding support slightly above the midline, and then all of a sudden you get the indication and then the shift, and then it starts oscillating like this, you are in a reversal or a trend change or a new direction. Okay? Remember I told you that dealers have to validate retail trader signals to give them some hope in the business. So what happens is, on a positive trend changeover, right, when it starts to turn up, short-term time frames, 1 minute, 5 minute, 15 minute, will start to turn to the upside. Retail traders have not entered. Retail traders enter on a break of the market baseline. When the market baseline crosses over, same as a MACD0 line, CCI line crossover, the intermediate trend starts to turn over. 1 hour. Chart will start to show signs that you are in fact in an uptrend. By the time that we're at level 3, and I thought it was ironic that the guy that made these slides has three points in there. That was pretty cool. By the time level 3 gets to the extreme, the intermediate longer term trend, daily, start to turn over, and then by the time that happens, 4-hour daily, by the time it gets there, the dealer is ready to make his reversal. Okay, so from a downtrend to an uptrend, he's going to come from the bottom side. He's going to cross over, shift momentum in the market, get to level 3, extreme, and then we're looking for the reversal. Okay? The exact opposite is true of a downtrend. All right? You will actually see these formations inside the indicator. All right, divergence, a lot of you know what it is, but how do you spot it? It's simple. It's when, because RSI is based, I told you it's based on the close, right? RSI is based on the averages of the closing price over X amount of periods. We use 21, but a standard RSI is 14 out of the can. Okay, so divergence is this. It takes an average of the closing price, but the dealer uses the wicks and makes a stop hunt higher than true price. RSI goes, I ain't falling for that shit. I'm averaging the closes because I know where you closed at, and I've already realized that price is falling over based on the averages, and that spike was merely a stop hunt. So you can do your little tricks all day, Mr. Market Maker. I'm ready for you. So TDI or RSI line will already make the M formation to start to drop, and divergence comes from the spikes to the high. When the dealer turns the spikes unidirectionally to the top or unidirectionally to the bottom, RSI spots that and nails it perfectly, which gives you your divergence. Okay? So divergence is the indicator has already started to wane, and price via a stop hunt is still waxing or gaining, waving higher, but RSI goes, I ain't falling for that. That's essentially what it is. Okay? All right, so we use TDI. I'm just understand where we're at real quick. Some people are asking, why am I doing this? To understand TDI and the baseline and the interactions, you got to understand RSI. So I'm breaking the RSI down for you quickly, and then I'll go right into TDI. Okay? All right, so the divergence is simple. The dealer has made the stop hunt higher, but RSI has waved flat, didn't fall for it. It stayed exactly flat because they're averaging the closes in here, and if you average the closes, it says, you know what, nothing's really changed. True price, look at the closes across the board. The closes are all in here. So that spike to the high that you made, Mr. Dealer, ain't falling for it. Okay? Another example of 3 hits to the low. But what happened is that RSI is already figuring out that the dealer's hitting the same level, but we're averaging higher on its closes. So what that means is, go down there, grab it. Go down there, but not so low, grab it again. Go down there, not as low as the first 2 times, and grab it again. RSI is picking that up, but the price seems to be validating the order short. Your job is to identify the low of the day, level 3, and a quasi head and shoulders here. Big fat W formation, divergent. Way to go. Gotcha. Okay, same thing. RSI has already fallen off. The stop hunt to the high one more time allows us to see that RSI is not falling for it. Okay? So now you understand the center force of the TDI, the RSI line. Is Traders Dynamic a better RSI? Well, it gives us better signals and trade confirmations. It's a powerful tool to scale in with when used in proper context of the market. It's going to help you build confidence in your trade calls with its shark fins and understanding the stuff that we use to help us identify where we are in the cycle. It absolutely will pick divergences more easily using the volatility bands. Okay, so let's break the individual components of the TDI down. You have simply the RSI line. We slowed ours down to line up with price action. We don't use a standard RSI. We use a 21 look back period. It's just smooth it a little bit and helps us understand. Now, I think it's kind of ironic if you look at this RSI, is that there's your consolidation, there's your stop hunt low, there's your rise. Okay, I think it's pretty cool when you see that back in the consolidation. There's a W. All right, cool stuff. So now, we already broke down RSI and understand it. What Dean has done is he went one better. He added a TSL or trade signal line, which provides us blood in the water. Okay? The trade signal line, our bloodline, is confirmation that there is a signal on the higher time frame. What this does is this red line pulls the 1 hour chart, the next higher time frame, and gives you a valid signal. Okay? So you have an RSI line and a moving average. Now, this is the part that I love about this indicator. A traditional RSI offers you a fixed 50 or market basis line. If the price is above the market basis line, the trend is positive. If price is below the market basis line or baseline, the trend is negative or down. The 50 is liquid in the TDI. It's a moving market baseline. I call it a liquid 50. This line here replaces this dotted antiquated line that's fixed. Okay? So what happens is that since this gold line is a liquid market basis line, the crossovers will come sooner rather than later and give you entries closer or confirmations closer to our true entry for the way we look at price now. Okay? So understand, the 50 is now a moving 50 in the form of a gold market baseline. And that is tracked on the higher time frame as well. I think it's the 4 hour. Where am I going? Here. Okay? I thought it was kind of ironic that it picks these turnovers. Look. That's our patterns that we work together on here. Inverted head and shoulders. It snagged it at the support. Right? M top. Snagged it at the resistance. Pretty cool, right? So now, if we know that the moving market baseline tracks the higher time frame, and it picks it pretty damn good, crossovers on there are fairly reliable, in line with the proper context of the market, the stuff that we've learned here the last 4 days. So to further the cause, he added some volatility bands, which are simply a take on Bollinger's standard deviation, and the way they're plotted, I don't know the calculation, but for argument, they're plotted 2 standard deviations away from the market base. So taking the market basis line, remember standard deviation, if it gets too far away, it's got to snap back. Volatility bands act as, I can't think of a better word to say it, as support and resistance based on the close, much stronger. When the bands contain the RSI line after it is broken, that gives us divergencies or a stop hunt. Here's what I mean. Okay? Here's the band, breaks out, and then falls back in. This is divergent based on standard deviation rules. Because it was above the 2 standard deviations. Now it's below 2 standard deviations. So it's in essence calmed down. When viewed in the proper context, using TDI, you can identify stop hunts, scale ins, exits, and if you've ever played that racing game, what I call checkpoint. My voice cracked a little bit. You ever play that? I think it's called cruising. You drive the car and you go through and the chick waves a flag and goes, checkpoint. Okay, well, you want to know how to manage a trade and stay in a trade longer? I'm going to show you the checkpoints along the way using TDI. Okay? So now, let's talk about the divergence. Right? I stretched it out so you could see it, but understand what you're looking at. Price has waved outside or come above the water. Okay? Price has waved higher, but the next leg has formed inside the volatility band. That is divergence at its finest. Because in essence, what is deemed volatility, and we know it's stop hunt or false move or whatever, but what's happening is the band has contained the volatility, is the definition. But understand what's going on. The dealer has made a flash to the high with less volume and averaged the close back below. The dealer, the RSI line has caught that and contained by the water. So there's the first leg of your formation. There's your second leg of your formation. Lights out, baby. Gotcha. Okay, divergence. So, we have two trades, shark fin high, shark fin short. Shark fin up, shark fin down, whatever you want to call it. A shark fin short sets up exactly like this. The bands are tight, which means what for our purposes? You are in phase one of the market cycle, accumulation or consolidation. If the bands on that thing tighten up, that means that price is not moving away from the market baseline. There's not a very far deviation from the center. So the bands will become tight based on that data. The RSI line breaks out and comes right back in. It appears that a shark fin is coming out of the water, coming out of the band. That's why our bands are blue. And we've made it these colors to look like a shark. It appears that a dorsal fin is emerging from the water. And it goes back in. When it crosses the red line, it's like the shark came up, went, and then took a bite out of the red line and made some blood. When you have shark fin high, blood in the water, what's happened in essence is that the dealer made an aggressive stop hunt to the high, came right back below the level, which is, remember I taught you, it's about the high and the low coming above or below those areas. Okay, so the fin goes back under the water, there's blood in the water, that's a setup. Okay, here you go. 31 pip range, Asian at 1 o'clock, no change. The dealer continues to stretch it out. He makes his vector candle above the blue box. Shark fin comes out of the water. The dealer hits the high, holds it. He naders to the center, hits the stops, hits it again. Jaws, baby. He shifts down, off to the races. You got him. Okay? That's your entry. Based on this data, shark fin high, sell. Okay, the exact opposite is true for shark fin short. You have a tight range, 37 pips. The dealer trades off the low, trades off the high, holds the range. Around 1:30, 2 o'clock, he breaks the low in 3 vector moves. He issues the railroad track spike to the low. Shark fin low, blood in the water. There's your entry. Confirmed by coming back inside the volatility band, going under the water and taking a bite out of someone's leg and producing blood. In essence, this is your W. Remember I told you the evening star and railroad tracks are difficult because in this one swipe, the dealer handles all the criteria. He shifts the zone back above the previous low. He traps the traders, hits the stops, and handles all his business in one swipe. Okay? Shark fin long. Same criteria as a short, inverted. Trade setups must coincide with our other indicators. All the stuff that we talked about. The TDI is a confirming tool. And you got to be in the right context and part of the cycle in the market. You got to understand how to use it. You can't just go, there's a little fin sticking out at 2 o'clock in the afternoon, New York time. I think I'll take that. That's not what I'm saying here. What I'm telling you is that understanding how to coincide the timing, the Asian range, the vector candles, the support and resistance points, the low of the day. When I say support and resistance, the ADR line, the pivot points. Those things coming together in the right segment of the market will give you good solid entries. Okay? 21 pip range. Shark fin to the downside. The dealer hits the low in 3 vectors. One more hit at the stops. Blood in the water. Shift the zone. Hit the stops, shift the zone. Hit the stops, shift the zone. Double top out, start to fade. Collapse inside the mustard, end the day, baby. And then here you go. 1, 2, 3, with the last leg being divergent. Okay, remember I talked about divergence? One leg out of the band, one leg in the band. Damn if that ain't divergent. See it? The second push by the dealer is done using spikes, but the closes and volatility are below. So RSI line stays flat. It's capped by the band, so to speak. Price waves higher, RSI, and the bands aren't falling for it. They're holding it. Okay? Now, a better trade entry is if this whole structure is below the 32. A better entry is if this whole structure is above the 68. Absolutely better trades. Okay? Scaling or checking with TDI. How do I hit my checkpoints? Okay? You have your shark fin, hold a Mayo. What happens here? The dealer has worked it towards the mayonnaise, right? It's not a sandwich. It's a pretty good trade. Shark fin, hold a Mayo. That means that price is contained by the 200 EMA pulled from the 1 hour chart. So the dealer is essentially, remember we pulled a higher time frame? The dealer is essentially faking a trade below the 50 on the 1 hour chart. Because the mayonnaise, it's a 200 on the 15, it's a 50 on the 1 hour. We're pulling that in. So now I'm looking at a tight Asian range. I got the moving average laying right here. The dealer is faking everybody to go below that average. Okay? Remember I told you in an uptrend, TDI or RSI will come slightly below the market baseline and rise. Okay? Slightly below the market baseline and rise. It will make or repeat, it will oscillate slightly below the market baseline. So if you understand, remember I drew it like this, where in an uptrend, right? It comes slightly below, up, slightly below, up, below, up. Okay, now, if we understand that, then we apply that principle to a moving market baseline. Game over, baby. Now I got my entries long. When price returns below the market baseline, dishes me a shark fin, takes some blood in the water, and I got you. I also got a nice divergence. Why? First stop hunt's outside the band, second stop hunt's inside the band, and I got me a big fat multi-session W, slightly below the market baseline, blood in the water. Gotcha. Own you today. All right? So now, scaling in. When you become proficient, you can use scaling in or checkpoints along the way to understand where you are in the cycle and if the cycle is still valid. How do I do that? Okay? You always have to be in the right market segment. I gave you the 3 segments. You know where you're supposed to be. Prices in the channel, Asian range. RSI line breaks outside the bands as a stop hunt. We know this is part of the cycle. The reversal's imminent. I look for the signals in the setup. I enter the trade. I price my stop loss because I'm lazy. 23 pips above the HOD. I add to the trade on a liquid moving market baseline crossover. I can add to the trade again coming out of level 2 when it breaks outside the volatility band. When price returns inside the volatility band and makes that wave, I'm divergent, I'm looking for the exit. Take everything off. Okay? Here's an example. All right, shark fin high, hold the Mayo. All right, it's a hell of a sandwich. Shark fin high, dealer goes right up, holds the Mayo. I got my first entry, shark fin, blood in the water. Beautiful. Okay, do I want to add? I get a crossover at the market baseline, I scale. I get a break outside the volatility band, I scale. The dealer makes the aggressive move and goes back into consolidation. There's my W, divergent, blood in the water, take. I take all units. And on a simple move, I am able to escalate that move to a net 400 pips based on just trading 1 unit, 1 unit, and 1 unit. Because it would be something like a 200 pip gain, and then a 125 pip gain, and then a 75 pip gain or something like that. That's how it panned out. You understand? Now, if you take a trade and you don't want to scale, no worries, man. All right, I'm in the trade here. I took it. All right, Steve, is the trade good? Is the trade good? Is the trade good? Checkpoint. It crossed the market baseline. Trade's still good, baby. I got it. Man, I don't know. I'm nervous. Look at that big spike. It might come back on me. What do I do? Man, it's green now. Holy crap. Wait a minute. It broke outside the volatility band. Checkpoint number 2. I got this today. Man, the dealer gives me 2 more pushes to the low, goes back in consolidation. I'm liking it. It's only level 1, but I've been up since over here. I'm friggin' exhausted. It's a good time. The vampire box is showing up. I'm starting to see the sun creep through my shutters. Oh man, it went back inside the band. I think I'll take here and go to bed and be happy that I booked 400 pips when I couldn't even book 4 last week. All right? Sounds good? That's how we use it as a checkpoint. All right? So scaling in, here are the key points. TDI offers a few points to scale in, can also be used as checkpoints. After the entry is made, add your trade on a market baseline cross. The market baseline is the moving gold line. Add again on a volatility band break, and exit your units on a return back inside the volatility band. Okay? My good friend Masood, Harvard graduate, Harvard Business School, came to me for trading. The guy could outwit anybody probably in this room. He's a genius. Couldn't trade. Why? Is he stupid? No, that's not the problem. The problem is he didn't understand there was a market maker in the context of that. So, here's his TDI set for the day that he took a while back, and it was flawless. Okay? He got shark fin high. I want you to notice his box is blown out. But what happened was the dealer shifted and he reevaluated the last part of it. He got a beautiful stop hunt to the high. Shark fin. Beautiful back inside. When he got a return under the water, he took his entry before he got blood. When he saw the blood, he added to his trade. Okay? He got a break outside after it had shifted, hit the stops, coming out of level 2, he took it, added to his trade, and when it returned back inside the band, this is almost like I drew it, right? Into consolidation he took for the day. Now, something that's amazingly pretty to me is that if you look at the green line, look at the zigzag right here, and look at the zigzag right there, and look at that. Level 1, level 2, level 3, back inside to the band, and a W formation, back to the market baseline. Isn't that cool? I think it's cool. All right, take a picture of this if you want. It's a good flashcard. All right, same thing. Scaling in, checkpoints. Channel less than 50 pips. The dealer vectors forms a cord of wood right past the mayonnaise. Shark fin low, hold the mayo. Price is contained by the mayonnaise. Outside, inside. Market baseline cross, add to the trade. Break outside, add to the trade. The dealer vectors high, evening star formation in the consolidation. Man, I'm divergent in here, I'm taking. Okay, not to mention, you're not going to stay up all friggin' day. You got to be exhausted. If you started here and you went out, had dinner, came over, started trading here, this is already a 20-hour day. Impossible. You're going to be out here looking to go to bed. This is my, I should change it. This is my bedtime box. All right, I'll get some trades in here, but as a general rule, if I'm not laying down watching TiVo, my wife gets pretty pissed at me. All right, that's bedtime TiVo box. All right, cool stuff. All right, one more. Nah, I want to make it a good one. Let's see. All right, this one. All right, last one. 30 pip range. Dealer started consolidating low, shifted the zone to the high side. Went into consolidation. Why? He had lower level shorts trapped. He pulled them up. Dealer comes out of the Asian range, kind of quarter woods to the high. Bam, throws the needle. Shifts the zone. You get a shark fin. Wait, there's divergence there, Steve. In and out of the band. Gotcha, baby. Price is higher in the band. Price is lower out of the band. That's telling me something. Divergent. Okay, shark fin high. That's an underwater shark. That's the attack you don't see coming. That's when you're minding your own business, hanging on the raft, and that sucker takes a bite out of your leg. That's the kind of shark that is, right? Okay, the dealer shifts the zone, hit the stops, add. Okay, he drops again, he breaks outside of the band. He goes sideways, but he never breaches back in or takes out the red line. You're adding. You get a nice push to the downside. The dealer comes back in. Bam. Ends the day in an outside structure. So I took a typical move of 114 pips. By adding a couple more shots to it or trades, I was able to take a traditional run and turn it into 284 pips. Understand the reasoning behind scaling in is you want to test the waters with one lot to make sure you're right. And then when you know you got these guys, they go for your throat. Why can't you go for theirs? It's hard enough in this business to be right. When you're right, you need to capitalize on the opportunity and pocket the money. Period. And if you don't want to add to the trade, that's okay too. But guess what? If you went all in here at the top side of this formation, then what do you got here? You got shift the zone, hit the stops, drop. Man, broke the baseline. Checkpoint. I'm good. I'm staying with this, baby. All right. Dealer spikes again. Next level. Hit the stops, drop. Man, he came outside the band. I'm good. Checkpoint number 2. I'm holding. You're outside, you're outside, you're outside. Outside structure to the low. The deal's trading in consolidation. That's a pretty good place to take. TiVo's calling my name in the bedroom. My wife taped all the stuff. Survivor, Big Brother, whatever the hell we watch. I don't even know. I'm just there. All right? There you go. That's it. That's all I got. Here's what I want to leave you with. Whatever indicator you use, that's okay. But make sure you understand that indicator and can explain it to someone better than I just explained this to you. That's the point. I know how to use this indicator. I understand the liquid 50, the moving, the structures. I understand what to look for in there. If you use MACD, no worries. But make sure you know how to read that histogram and what those things are showing you. CCI, same thing. You can use whatever you want. But if you're starting fresh and you have come to me with a clean slate, why not use the stuff that's in here and study the stuff that we got, okay? All right. I've had a great 4 days. It's been fantastic. If there's a question I did not answer for you, send me an email and I'll get to it. Understand that I've been yelling at you guys for 4 days. My throat hurts. I need a day or two to recuperate, to decompress, to decompose, right? From Seinfeld, I need a day or two to decompose. I'm going to take a couple of days off, and then by the end of the weekend, I'll look at the emails. Understand we got a session Sunday night, 7 o'clock. Be there, be square. We're going to have the presenters that were not available for this week or because my big mouth hogged it all up. We're going to have Kim K, Zen and his wife, or Zen, not sure if his wife's available. Somebody's got to watch those 35 children. Anyway, I hope that you got your money's worth from me this week. I know that I got my money's worth from you guys. I absolutely enjoyed it. I hope that you saw the things in here and in me that show you that if you master this method, you will get control of your life and your trading. I promise you that everything that I told you is real and authentic and that it can be validated and will change your trading life if you allow it to. The things I talked about, joking around about your allowance, your father beating you, sending you to bed without, that's the stuff you got to work on. That's your next step from here. You got to fix your mental game in order for this stuff to come to fruition. And you got to be like they say that vibrate on a higher plane, be in the receiving mode of this money or these things that you deserve. That's stuff you got to work on, man. If you got good insurance, go see your shrink, work it out, therapist, work that stuff out. But if you put your pencil to the paper and you do the stuff that I showed you, I guarantee you success is yours.